Hi guys, welcome back to today's market insights. Right, especially during the weekend, there was the start of the war in the Middle East. Right, between U.S., Israel, and Iran. Right, okay. U.S. and Israel attack Iran. Right, okay. So today's topic will be about market insights. Right, okay. What I will be sharing the insights I have for you during this period. And the topic is war in the Middle East and how it will affect traders, right? Okay, so you should be able to understand better about this war, right? And going forward in terms of investing and trading, how you could actually get better informed, right? Okay, so let's without further ado, let's get started. First thing first, disclosure, right? Okay. Everything that I share here is for educational purposes only. This content is created for informational and educational purposes only. It does not constitute financial investment, legal or tax advice. Not a recommendation. Any analysis, charts or company mentions are for learning and discussion purposes and do not represent a buy, sell or hold recommendation or any specific trading or investing instructions. I don't hold any license, no license. I'm not a MAS licensed financial advisor. You should conduct your own research and consult a licensed professional before making any investment or trading decisions. Market risk, investing and trading involve risk. Markets can be volatile, especially in sectors affected by news, earnings, regulations or clinical developments. Losses can occur. No guarantee. Past performance, historical data, technical patterns, or dividend history do not guarantee future results. Data accuracy information is based on publicly available sources as of 2nd of March 2026. Accuracy and completeness cannot be guaranteed, right? In short, right, in summary, whatever I say in this video, right, do not take it as true, right? You need to do your own fact finding. You need to do your own due diligence. Like I say, in short, do not take a word that I say as it is, right? Okay, go and investigate more yourself. Make sure you do your background check, right? Okay, so let's get on with it. This is about what's happening from the war, right? Okay, armed conflict creates uncertainty, and uncertainty creates fear in the markets. The markets don't like fear, don't like uncertainty, right? Okay, so once there's uncertainty, there is fear in the markets, and generally when there's fear in the markets, there may be more selling, right? Okay, markets react whether traders like it or not, right? Okay, so markets will react whether you like it or not, whether you are an investor or trader. So make sure you get yourself more informed, right? Okay, and to really know what to do with your portfolio, right? Because of this war. Ignoring geopolitical risks increase portfolio vulnerability, right? Okay, so make sure you understand better through this video, right? Okay, understanding the impact does not equal to endorsing the outcomes, right? Okay, I'm going to be sharing with you some examples of outcomes that's possible, right? Okay, but you need to understand the impact, right? Okay, this is about understanding the current environment so you can be better prepared, right? Okay, now what is the current situation right now? The current situation is that the US and Israel have launched a military campaign targeting leadership in Iran, right? Okay, and through the weekend, right, they have launched a massive offensive on Iran, right? Okay, and Iran has retaliated, right, by targeting assets in neighboring countries that has U.S. foothold, right? Okay, and the big threat here is that Iran has threatened to close the Straits of Hormuz, right? Okay. A narrow sea passage where 20% of world's oil flows, right? Okay, now this is a big uncertainty because it's a threaten, right? Okay, it may or may not happen, and markets don't like uncertainty, like I say again, right? Okay, so take note of that, right? Okay, and precisely it will affect the flow of oil supply, right? Okay, and this strait actually 20% of the world oil flows through them, right? Go through them. So it does affect oil prices, right? Okay. So if it does happen, will there create a shortage, right? You have to ask yourself, right? Okay. Most likely, it will happen, right? Okay, creating a shortage. So if it does create a shortage, based on supply and demand, will oil prices go up, right? Okay. So over here, the knee-jerk effect, right? Right now we are at the knee-jerk effect. What happens the moment war starts, which is right now, right? Initial shock is always there, right? Okay, markets often see a knee-jerk reaction. What is a knee-jerk reaction? An immediate unthinking response, right? Okay, where stock prices drop sharply due to surprise and uncertainty, right? Okay, so as of now, today is the first day of the trading week. The offensive from US started in during the weekend, right? Okay, so the market is likely to see a knee-jerk effect where prices drop. As of now, right, the futures on the S&P are all down by more than 1%, right? Yeah, in fact, Nasdaq is already down by 1.5%, right? Okay, considered not a lot, right? A typical day in the S&P or even the Nasdaq dropping 1 to 2% is quite okay, right? Okay, not that big of a deal, right? Okay, but here's the thing. Why we call it a knee-jerk effect? Because when after this happen, typically prices do recover, right? Okay, and I'll show you through the charts later on, right? But continuing with the knee-jerk effect, I don't say this without basis, right? Okay, I base it on facts through the through history, right? Okay, so let's talk about the 2003 Iraq war, right? We term it the Saddam Hussein war, right? Okay, the dip, right? Okay, weeks leading up to the invasion, right? Started from a high of 932, right? On the S&P, right? Okay, and on 15th of January 2003, right? It dropped to a low of 788, right? By March, right? Roughly 2 months, right? Okay, 8 weeks, right? Roughly 8 weeks, 15% drop, right? Okay, quite a lot, 2 months only, and it's already 15% drop. Highly volatile period during that time due to uncertainty again, right? Don't know there's a war or don't know there's no war, but the heightened volatility is there, right? Okay, heightened uncertainty is there, right? And people are nervous, right? Okay, so but quick relief rally once invasion began from 20th of March. Why? Right? Because there's more certainty, right? Okay, good news or bad news we put aside, markets react basically on certainty and uncertainty, right? They don't know whether there's a war. That is uncertainty, right? Okay, but once wars started, right? Okay, the certainty is there, right? The invasion is there, the offensive is there, right? Okay, there's no other alternative. It's a certainty, right? Okay, now the S&P 500, right? Okay, was highly volatile during that period, and it closed 866, right, on March 19, 1 day before the invasion, right? Okay, but and most importantly after that, right, after the invasion started, the certainty is there. What happens, right? Okay, the moment war starts, right, the turnaround once the invasion started on March 20th, the market actually rose 3.37% on the consider the first day of closing after the invasion started, right? Okay, by end 2003, right? Okay, from March all the way to December, the market didn't go down, right? Okay, the market actually rallied to 1,111, right? Up roughly 28 to 30%, right? Okay, so during the war, the market actually went higher, right? Why? Because there's certainty, right? Certainty that the war is there, right? Okay, why markets drop? Like I say again, It's because of uncertainty, and markets don't like uncertainty. And once there's uncertainty, there's fear, right? Fear causes more selling, right? Okay. So over here, when there's more certainty, people start to have more confidence in the markets and start getting back into the markets, right? Okay. And this is the reason why the markets actually rally higher, right? During the war, even though it was a war, but the certainty was there, right? Okay. So the main point I want to mention here is look at the markets based on certainty and uncertainty, right? Okay. Uncertainty creates fear, and fear normally causes more selling, right? Okay. And certainty means what, right? Okay. Markets like certainty, right? Okay. And when there's certainty, there's less fear, and there will a lot of times there will be more buying, right? Okay. And this is the reason why S&P went higher, right? Okay. And this is just one instance of the Iraq war, right? Okay. A lot of wars actually follow this pattern as well, right? Okay. I'm not saying that all the wars, including this current one that is ongoing, is going to follow this pattern, right? Okay. But we like to look at past histories and patterns and trends from the past to give us a better idea on how we can use the information to maneuver the current situation right now, right? Okay. It may not be exactly the same, right? But if it's a little bit similar, we could take it as a information to help our investing and trading as well, right? Okay, I hope you understand that, right? So understanding the V-shaped recovery, right? Okay, why markets rise during that war period, right? Okay, certainty, right? Markets can handle bad news. Even bad news is still certainty, right? Okay, but they cannot handle unknown news. Is there going to be a war? Is there not going to be a war? That is unknown, right? Okay, but and unknown news creates uncertainty, like I say again, right? Okay, once war starts, right, they know for sure the war is there already, right? Okay, the uncertainty becomes a certainty already. The unknown becomes a known thing, right? Okay, and government spending, right? Okay, a lot of times war often leads to increased government spending in some sectors, right? Which can stimulate parts of the economy as well, right? Okay, that's how I look at the overall stock market, right? So far, I'm covering only the overall stock market in relation by using the S&P, right? Which is a major index and barometer of the entire stock market in US, right? Okay. Now, very importantly, when there's war, right, we always focus on oil prices, right? Okay. In almost every modern conflict, right, in the past few wars, right, oil have seen a price surge because traders fear supply disruptions, right? Okay. Ukraine war started in 2022, right? Oil jumped from $92 on 23rd of February 2022 to reach a peak of $139 on March 8th, right? Okay, that is within 2 weeks a 51% move. This is a big move, right? Okay, and during the Saddam Hussein war, right, oil rose from $25 all the way to $37, right? Okay, within 8 weeks, right? Okay, and this is also a almost 50% appreciation move, right? Okay, so oil overall oil do go up, right? Especially it involve wars that with countries that are oil producing countries, right? Okay, so we know that Iran is also one of them, right? Okay, so these might be quite similar, right? Okay, in the sense that the patterns might happen the same way as well, right? Okay, not exactly the same, but with this information, I hope that you can make a more informed decisions on your own, right? Okay. Next, in almost every conflict, right? Okay, we continue with Hamas war, right? Okay, oil spiked from $85, right, in 2023 October to $91, right? Okay, and that is within 3 days of the Hamas war, right? Okay, and we go back all the way to the Kuwait war, right? Okay, oil jumped from $21 all the way to $46, right, within 10 weeks. This is double the price of oil, right? Oil price more than double, right? Okay, is a 119% appreciation, right? Okay, basically 21 to 46 is more than double in price, right? Okay, so these are the more recent four wars that happened, right? And it does create a spike in oil prices, right? Okay, so that's the trend, right? I'm not saying that the trend will be the same for current one, but we look at history and patterns to make a more informed decision, like I say again, right? Okay, so you should do your own due diligence and actually make sure like you make a more informed, better decision, right, going forward, right? Okay, and we talk about the US dollar, right? Okay, in times of war, the world buys the US dollar. They treat, right, like it is a safe haven, right, for their cash, right, for their US for their currency, right? Okay, so this is known as capital flight, right, where assets flow out of a country perceived as risky, right? Okay, so the pattern is that the US dollar usually strengthens immediately when war starts, right? Okay, and this is an example of Ukraine, right? Okay, the dollar index, which represents the US dollar pricing, right? Okay, rose from 96 in 2022, 23rd of February, to reach 114 on September 28, 2022, right, within 31 weeks, right? Okay, and this is a huge move. Forex traders will know this, right? From 96 all the way to 114, this is a appreciation of thousands of pips, right? Okay, is a and this is the because traders fled riskier European currencies towards US dollar as a safe haven, right? Okay, and typically when war happens, right, in times of war, the USD do strengthens, right? Okay, not all the time, right? Like I say again, these are the patterns and the trends, right? This time round it could be different, so make a more informed decision and do your due diligence. And during the war, right? Okay, the dollar actually still remains strong, right? As long as inflation, rising prices stay high. And typically when there's war, inflation starts to go up a little bit as well, right? Okay, this is something that will affect the dollar pricing as well, right? Okay, so and of course, I want to share with you what are the things to look at apart from the overall view here. There are winners in the chaos, right? Okay, in this war or past wars, right? Okay, defensive sectors, right? Okay, traders don't just buy the market; they rotate into specific sectors in times like this, right? Defense, especially companies like Lockheed Martin, Northrop Grumman. They are in the defense sector, right? Okay, and during the first month of the Ukraine war, defense stocks outperformed the S&P 500, which I will show you in the next slides based on the numbers, right? Okay, and large energy oil producers actually benefit from this chaos or war, right? Okay, in the past, right? In the past, I'm not saying that it will happen again, but a lot of times it does repeat itself, right? Okay, but it could be different now, right? It could be different, right? So do your own due diligence. And cybersecurity, right? Cybersecurity, modern wars are fought online, right? Okay, companies protect data often see increased demand, right? Okay, so these sectors are basically defense, energy, and cybersecurity. So let me show you defense sector first, right? Okay, defense sector, right? Traders focus on this sector due to the immediate increase in military spending and government contracts, right? Okay, war starts, definitely there's more military spending and more issue of government contracts, right? Okay, the ETF representation, there's a lot, right? Okay, one of them can be ITA, right, which is iShares US Aerospace and Defense ETF, right? ETF means exchange traded funds, right? Okay, and these exchange traded funds actually invest, buy stocks that is in the US aerospace and defense sector, the stocks that are in these sectors, right? Okay, so key tickers is LMT, right? Okay, like I mentioned earlier. But over here, this is a table to show you the previous Ukraine war, right? Okay, roughly 1 month, right? Roughly 1 month after the war started, right? Okay, what happens is that the ITA, the ETF, actually from about $99 went to 111, right? Okay, this is roughly a 13% move, right? Okay, so compared with the S&P during the same period, right? The S&P actually rose only 5%, right? So the defense sector during periods like this in the past, especially the Ukraine war, right, actually performed much better, right? Okay, and other wars as well, it has actually followed the similar pattern and trend as well, right? Okay, not saying the current one is the same, right? Okay, I'm not saying that, right? It could be different, right? I'm just presenting you facts and figures and history, trends and patterns, right? Okay, and you make a more informed decision going forward on how to maneuver this current ongoing situation, right? Okay, now we talk about the energy sector just now, right? Okay, oil typically spike on supply risk, right? The fear that oil will be cut off, right? Directly benefiting companies that extract and sell crude oil, right? Okay, so basically the one exchange traded funds is SLE, Energy Selects sector, right? Okay, and the key stock symbol or ticker is ExxonMobil, right? Okay, XOM. Now, we look at just XLE and S&P, right? Okay, during the Ukraine war again over here, based on the periods here, roughly 1 month, right? SLE was roughly around $66, right? But after 1 month of the Ukraine war, it went to 79, right? Okay, so this is almost a 20% percentage move, right? Okay, now for the S&P, right? Okay, same period, right? It went up roughly 5%, like what I mentioned earlier, right? Okay, so this is really outperforming the S&P in general, right? Okay, because the S&P contains all the sectors combined, right? Okay, so these are the sectors typically outperform during periods like this, right? In the past, right? Okay, so like I say again, it might not happen this time round, right? Okay, but I'm just presenting you the trend and history and the facts and what happened in the past, right? So that you can decide to make better decisions, more informed decisions on how to handle the current situation here, right? Okay, now the next one is cybersecurity sector, right? Okay, modern warfare includes digital attacks, right? Okay, companies, government increase their spending on digital protection during international tension, right? Okay, so one of the ETF you can look at is CIBR, right? First Trust Nasdaq cybersecurity ETF, right? Okay, and the key ticker is CRW, right? If I'm not wrong, right? Okay. Over here, we can see over here, based on the ETF, right? Comparison, same thing, same period, like I mentioned earlier. This one is also outperforming the S&P of 5%, right? It went up almost 16%, right? It went up almost 16%. So typically, these are the three sectors to look at, right? When times like this happen, right? Okay, we also don't know how long it will move or things like that, right? Okay, just to show you in terms of the individual stocks, right? Okay, example for Lockheed Martin, right? Okay, one of the largest defense company, right? It closed $355 on the 24th of February 2022, the day Russia invaded Ukraine, right? Okay, when the war started, right? Okay, it rose to 453 by 25th of March 2022, right? Okay, roughly 1 month, right? Okay, and roughly 1 month, the gain of this stock actually went about 27%, right? Which is considered quite a good and huge move, right? Okay, 27% in under 1 month, right? Okay. S&P on the other hand, right, based on the numbers that you see, same period as well, 24th of February, the S&P closed at 4288 roughly there, right? Okay, and by 25th of March, roughly 1 month, right, it closed at 4546, right? This is a gain of just 6%. It's still quite a big amount, right? Okay, for the S&P, right? Okay, but comparing with the stock itself, definitely the stock is outperforming, and this stock is in the defense sector, right? Okay, so just one example on this, right? Okay, you can find other examples and do your own due diligence and do a little bit of research and background check. You can check more on the ones that I talk about, including the energy and cybersecurity as well, right? Okay, now timeline, right? Okay, the time cycle of war, right? Okay, pre-war high uncertainty, right? Okay, we don't know what is going to happen, right? Okay, a lot of possible scenarios can happen, right? Okay, and may happen, right? Okay, and when there's too many possible scenarios to happen, uncertainty is very high, right? Okay, and once uncertainty is very high, people prefer not to take any actions and really get out of the market first, right? Okay, and when they get out of the markets, they do sell off some of their portfolio and market drift lower, right? Okay, and like I say again, when there's more uncertainty, the fear of not getting the oil supply might be disrupted, and oil typically starts to rise, right? When people think that, hey, the supply of oil might drop, right? Okay, so better buy now, right? Okay, that's what typically people think this way, right? Investors and traders, that's the psychology behind that, right? Okay, might not happen all the time, like I say again, right? Okay, but this is what happens in the past, right? Okay, now the start of the war, right? Okay, just in summary, the start of the war, always a knee-jerk effect, right? Drop in stocks like what we are seeing right now, right? As I am speaking just now, the S&P has already dropped by another 0.1%, right? Okay, as of now, right? Okay, and there is a massive spike in gold and oil, right? Okay, gold is already up 1.6%, right? Considered not very extensive, right? Okay, we have seen gold move up much more percentage in normal days without war, right? Okay, but the spike in oil and gold today, oil is up 7%, which is considered massive, right? Okay, gold, I would say is quite normal, up just 1.6%. After market open, remains to be seen, but typically the demand for oil and gold typically is there during war periods, right? Okay, that is based on the past, right? Okay, and during the war, markets start to stabilize. Why? Because certainty is there already, right? Before the war, at the start of the war, there's a lot of uncertainty, right? Okay, a lot of possible scenario, right? Okay, but during the war, once the war sets in, right? Okay, the many possible scenarios reduce a lot, right? Easily more than half, right? Okay, and meaning there's more certainty in the markets, right? And once there's more certainty in the markets, right, market starts to stabilize and recover, right, as the scope of the war becomes clear, right? Okay, and towards the end of the war, or at the end of the war, what happens? Everything reverses back to normal, right? Okay, and when that happens, the supply of oil is no longer a concern, and that's why oil prices typically backs down, right? Okay, and markets focus back on the economy, and typically, depending on how the economy is doing at that time, right, it will affect the markets from there on based on the economy, right? Okay, now so final thoughts, right? Okay, final thoughts. Before I go into final thoughts, let me just quickly show you the charts and share with you what is happening, right? Okay, based on the past, right? Okay, based on the past. Now, we can see over here, this is the uncertainty during the tariff, right? Okay, the tariff. And during this period in 2025, the only major big correction that happened in 2025 is the tariff, right? Okay, the Trump tariff. And we can see that there's a lot of uncertainty and fear in the markets, and that's why it sets down. And once there's more certainty about the tariff, right, you can see the market starts to recover, right? Okay. Another one is over here, right? Over here, that is during the Ukraine war, right? Okay. And once there's more certainty, right? Okay. And of course, the Ukraine war went much lower. Is mainly because of a combination of economic reasons as well, right? Okay. But eventually, you can see that with more certainty, right, towards the end of 2022, right, when people know that the war is going to continue, the certainty is there that the war will not end so soon, but the market start to recover, right? Okay, because there's more certainty, right? And if we were to go all the way, right, it will go all the way to 2022 to 2023, right? Okay, this is when the Saddam Hussein war happened, right? Okay, you can see that even at during the February March period when the war started for the Saddam Hussein war, right? Markets actually rallied from then on, right, to a very big high, right? Okay, so basically because of certainty, right? Okay, after the war started, right? Okay, my point here is that we should look at the markets based on certainty and uncertainty more than based on the news, right? Okay, so final thoughts here, right? Okay, staying safe in a volatile environment. Right now, we are in a more volatile environment. Reduce position size, that is very important. Trade smaller amounts than usual because the volatility can actually wipe out an account very quickly, right? Okay, focus on liquidity, right? Focus on trading large cap, well-known stocks that can be easily get buy or sell, right? Okay, you can easily get in and get out, right? Okay, ignore the hype. That is very, very important. The media headlines, news are designed for clicks, right? Okay, they are designed to get your attention, right? That doesn't mean whatever they say is good or bad for the markets, right? You need to derive your own decision, right? Okay, based on I look at news and headlines based on whether it's more certainty to the markets or more uncertainty to the markets, right? Okay, traders must and very important, traders must focus on the way price move, right? Typically price action, right? The actual movement of price on the charts do make the difference, right? Okay, whether there's more buying or there's more selling based on price movement on the charts, we can see that, right? Okay, and historical lessons, right? Okay, markets are resilient. The shock is temporary. The trend eventually returns to economic fundamentals, right? Okay, no war lasts forever, right? Okay, and even if it lasts long, very long, like the Ukraine war, right? Okay, it became a certainty that the war is going to last long, and the market still ready anyway, right? Okay, so these are my final thoughts to share with you, and also share with you more decisions based on history trends that happened in the past based on the wars, and hopefully with this video you can make a better informed decision and do more background checks for yourself and verify it, and make a better, more informed decisions about your portfolio and how you can maneuver this time of war period, right? Okay, so that's all from me. Hopefully I can give you another update very soon. Looking forward to you subscribing to my channel. If you feel this is helpful, do please subscribe to the channel. It will encourage me to do more frequent videos like this to you, right? I know my last market update is quite some time ago, but if you do show your support through subscription, right, subscribing to the channel and liking the video, I'll make sure like I will do this more frequent and share more of my market insights with all of you. Thank you so much for watching all the way till now. May the markets be with you, and all the best to your own investment and trading. Stay safe, and I'll see you real soon.
I hope you loved the video and learned something new from it. If you want to receive more videos like this, hit that subscribe button and ring that bell for notification. And if you want to learn more about the trade to win formula that I use in my trades, click on the link or button around this video to join my next free online workshop. In the workshop, you'll learn everything from finding the best opportunities to making consistent winning trades in the markets. I'll see you on the inside.